Okay. Let's start with SuperCop. SuperCop PSC. I believe you have the material with you. Okay. You look at the requirement of the question. SuperCop PSC. What is the requirement of the question? Is the question number one. It said we should consolidate as at 31 December 2002. Good. I will now open everything. Don't forget group account is the account of parents and subsidiary, plus or minus adjustment. I will now be showing you the adjustments, and we are going to be picking the adjustment to apply. Posting, yeah. Let me pick my pencil. Okay. I will say SuperCop. Next thing, consolidated statements of financial position as at 31st December 20S2. Good. The next thing, assets. The non-current assets, PPE. 409, 1906 plus 2860. Investment is SuperCop. SuperCrook. SuperCrook. 18. I will say goodwill. After the goodwill, I will leave 2 line space. I will leave the 2 line space. I'll go to the current assets. Inventory. One 406 plus 360. Next, I have my trade receivable. Trade receivable of the parent, 2267 plus 1079. Cash. (221 plus 7). Total assets. Equities and liabilities. Equity shares. Retained earning. NCI. Leave a space before the NCI. Next, I will go to No current liability, which is the loan. 1923 plus 615. Current liability, trade payable. 1219 plus 1157. That's liability. All for 3 plus 13. For me to balance this account, what do I need? For this account to be balanced, I will start writing them out. The first one is the group structure. How did they start? Group structure. The second one is adjusted retained earnings of subsidiary as per SOFP. Next, after that, determination of net assets. Determination of net assets of who? Subsidiary. I will say items, date of acquisition, date of consolidation and post. I need the goodwill. Don't forget the formula for the goodwill. For the goodwill, so goodwill, I know the formula. Cost of investments, add NCI, purchase consideration, or less the net assets at the date of acquisition, goodwill. I don't know whether that is going to be impairment. I will leave space. Next, what do I need? I need retain any of the parents. I need retain any of the parents. Of parents. As per SOFP. Next is the NCI. Date of acquisition. NCI. Date of acquisition. This is what I'll quickly do in exam. To end mark. Let me show you. I will write this one out. For doing this, are they going to give me mark? Yes. They are going to give me mark. I will now be posting. I will read, I will now post. After I've opened everything like this is, I will now post as I'm reading and posting it. No time in exam because I know where everything is going. Let's read the retain earning at SOFP. Retain earning of the subsidiary as at SOFP. If you go to the question, it's 1520 output. 1520. 20. For that of the parents, I will also put which is 2524. I will now start reading the question. Let me open my solution pad. Let me share the solution pad for the worker. Let's pick another color for this. You don't need to do anything, just listen to me. You don't need to do anything. Listen and follow me. That is it. Supercon Limited, additional information 1, acquire 70% of Supercro on 1st January 2000. The group structure, I will post parents, 70%, NCI 30%. That's all. He said on 1st January 2000, date of acquisition. I'll quickly note that in my workings. I'll say workings, date of acquisition. When are we consolidating? 31st. The date of acquisition is 1st January 2000, but we are consolidating 31st December 2002. If you look very well, it is 3 years. I can't. He said when the retained earning is now 100, the date you acquire, what was in the retained earning, said now 100. I'll go and post. Where is retained earning going to? Net assets. Where is retained earning going to? Net assets. Net asset of the subsidiary. He has given you retained earning at the date of acquisition. I'll pick the shares. What is the shares? 1,000. Retained earning. Now 100. Please ask me a question. Don't forget, net assets are 5. Share capital, share premium, retained earning, other revaluation surplus, which can happen at the date of acquisition or is in the book, or two of them happen in a question. So I'm not bothered. Everything where it's going, I know it already. It's only the adjustment I'll be showing you. If you are talking about cost of investment, I know it's for goodwill calculation. If you are talking about NCI, goodwill calculation and date of acquisition. If you are talking about retaining share capital, share premium, you are talking about net assets. The only thing I want to show you that is remaining is different adjustments. That's all. Before we solve like 6, those things will come to play within your system. They will surely come to play. Any question for me, please? Feel free. Feel free to ask questions. In the absence of no question, let's continue further. No controlling interest is to be mentioned as proportionate of net asset. Oh, don't forget share proportionate. How do I know it is share proportionate? Two ways. I said NCI can be valued. NCI can be valued in two ways. Fair value. Share proportionate. I told you another name for fair value. I said it is what? Full goodwill method or gross goodwill method. But for share proportionate, the same to net assets method, or they call it partial goodwill method. For share proportionate, how do I know in exam? I said company policy. And two, when the question is silent. These are the two ways. These are the two ways which they give us one. Company policy, sell it is the company to mention NCI share proportionate. For share proportionate to occur, I must know the net assets, which I have not known yet, finish. I'm only seeing two. So, but in order not to forget in exam, I'll quickly write it on the heading. Heading of the goodwill. I say you have to use share proportionate. So SP. Not to forget. That's it. I will now continue. A due diligence exercise carried out at acquisition of Supercorp Limited reviewed that Supercorp Limited land had a fair value of 800 compared to the book value of system, my brothers and sister, if any brother, but I know there's sister. Now, look at it. First adjustment you will take care of, fair value adjustments. Because the net asset must be at fair value, according to IFRS 3. Very simple. What is your own duty? The asset we acquire, we'll give it to, I want to buy this subsidiary. I'll give it to Jide Taiwo and Co. to help me do the valuation of that asset. To help me do the valuation. They came back. They say it has a fair value of 800. Whereas in the book, it was 610. I will ask myself, it is surplus or deficit? That is it. But before going there, fair value adjustment can be two. It's either they revalue up, revaluation, surplus, or they revalue down, revaluation, deficit. These are the two ways. It's either they revalue up or they revalue down. How do I know they revalue up or they revalue down? Very simple. In English one, the question will tell me in English one, the fair value is higher than the carry amount. They will tell me in English one that there is a revaluation surplus higher. That if you revalue, fair value surplus. In English one, you will be seeing English like in excess. The fair value is in excess of the book value. Above, upward, higher. If it is deficit, lower, below, downward, you will be seeing it. Or they will give you the carrying amount and fair value. Just like this question, they give you carrying amount of system and today value, fair value of 800. Carry amount is lesser than the fair value. This is surplus. Surplus of how much? 190. 190. That is the surplus. What do I do to the surplus of 190? Look at it. If it is surplus, accounting entry, PPE, debit plus 190. I'll credit reserves, credit plus 190. That's all. That is all. If it is deficit, opposite, PPE, credit minus, reserves. Let me post this 190 to see. You say, come in, you must get it by fire by force. This 190 is a must in any question. PPE, I will debit. Don't forget, if I'm debiting PPE, I'm increasing it. Plus 190, debit. I will credit reserve. I will credit reserve. Revaluation surplus on land. 190. That's all. That's all. Let's go to the question. Oh, yes. Suppose it has now become 820. That means from 800 to 20 as at what date? Date of consolidation, 31st. This is the date he acquired, which is 1st January 2002. Date of acquisition. Date we are consolidating, 31st December 2000. And this one, 2000, 2002. Is it? It has increased further. What is your own duty? I will just go to the PPE, the further 20. Plus 20. To make it 210. I will now come to DOC. Net asset at date of consolidation. It is now 210. 190 plus 20, 210. The difference will now give us the post-acquisition of 20 to share. This is what we are saying. Ask question, please. Ask question. What is it? Next. Next, I will go to the question again. There was a cash in transit of 140 from Super Corp to Super Group. Super Group to Super Corp. Oh, cash in transit. What will come to my head? Trade receivable, trade payable. Additional adjustment number 2. Please take note of the adjustment. Is the same at any time. That is why it is very easy. Look at the second adjustment. Trade receivable slash trade payable reconciliation between parents and subsidiary. Adjustment number 2. It can only come out in exam in 3 ways. 1, agree to owing. When you agreed to owing. This is the first one. What do I do in this regard? There will nothing be in transit. Trade receivable. Credit minus. Trade payable. Debit minus. This is it. Second one. The second way it can be tested. Total cash or inventory in transit. This is the second way. What do you do in this regard? Trade receivable. Credit minus. The cash that is in transit, I will debit. The third one. Third one. Part in transit. Parts in transit. This is the third one. Look at it. I will say trade receivable. Credit minus. That part of the cash that is in transit, cash, the parts, I will debit plus. Trade payable. These are the 3 ways that come in exam. They cannot test 2. It is only 1. They cannot test 2. It is just 1. They can never test 2. 1. Let's go to the question now. Set. As 31st December 2002, there was a cash in transit of 140. I will ask them, what is the total receivable now? You are talking about. including Super Cup trade receivable is 1,000. Super Cup say, I'm receiving from my subsidiary 1,000. Unknowing to him, he has sent 140, which is in transit. Home from Super Group Limited. Included in the Super Group Limited is trade payable of 860 due to Super Cup Limited. Because there is a cash in transit of 140, you will not pay the money again because you transfer. Out of the three, which one did they give me? The third one, which is the common one, part in transit. You cannot owe each other minus 1,000. Cash in transit of 140, debit. Trade payable, I will debit 860. That's all. Nobody asks you this one in exam. It is the posting is your concern. Immediately you are ready, you know what to do. Go and post. No story. That is it. Oh, yeah. I will post them. I will post them now. Just take note of the posting, the adjustment. Oh, trade receivable minus 1,000. The cash plus 140. Trade payable minus 860. Any question for me? Any question for me? Next one. During the year, Super Cup sold inventory to Super Group. Oh, unrealized profit on inventory. How do I know? Immediately you are reading it. So the next adjustment in this class, please take note of the adjustment and how it comes. Look at it. Unrealized profits on inventory. Two things must be established. One, there must be unsold at DOC, date of consolidation, that is reporting date. There must be elements of profit. How do I know there's element of profit? One, you will hear markup, which is on cost. Two, margin, which is on sales. Then the one we apply formula. These are the three ways. These two must be established. If there is element of profit, but there is no unsold, there's element of profit, but there is no unsold. Waka pass, japa, and sold the goods. If there is unsold, but there's no element of profit, japa. Good. Let's go to the next one. Let's see the question now. It said, during the year, Spark was so good to Sparkle for 3.8 million. For 3.8 million. Total sales 3.8. This good has cost Supercoop 2.3. Oh, cost is 2.3. Has it made profit? Yes. The one we apply formula. What is the profit now? 3.8 minus 2.3. Yeah. 3.8 minus 2.3.
1.5.
1.5. 1.5 is profit. I will now ask the question, is there any also, there's element of profit? Is there any also? One quarter of this goods still remain in the inventory. 1/4 of the total sales. 1/4 still remaining. 3.8. 1/4 times 3.8. That is what we call the formula 1. 1/4 times 3.8.
950.
950. We will now apply the formula. This is the formula 1. See, you will now apply this formula. Profits over total sales times unsold. What is the profit? 1.5 over total sales of 3.8 times 950. What does it give us?
$375.
375. I will now ask, this is the accounting entry. Seller's account. Anybody that said you will debit his account, the return debit minus. Consolidated inventory. I will credit. This is it. Seller's account, debit. Consolidated inventory, credit. I will go to the question now and pose. I'll go to the question and pose. I'll say inventory credit minus 375. Consolidated inventory has been, who is the seller? We ask between the parent and subsidiary. I will ask the question, who is the seller?
Parents.
Supercorp sold inventory. Supercorp is the seller. Which is the parent? Which is the parent? I will say unrealized profit on inventory. Why do you sell and make profit for your subsidiary? I'll debit. Any issue before we proceed? Lastly, An impairment review has concluded that goodwill is impaired by 50,000 at the end. Impairment. Anytime there is impairment, I will ask the question. How do you want me to value NCI? Because treatment of impairments depends on the valuation of NCI. I'll say, oh, NCI. How do they value valuation of NCI? Because the NCI can be valued at fair value and at share proportionate. If it is fair value, the goodwill belongs to both the parents and the NCI. I will credit the goodwill minus debit for the impairment. If it is share proportionate goodwill, the parent accounts, and this question says it is share proportionate. Therefore, parents will suffer the impairment. I'll credit the goodwill, even though I've not known the value of my goodwill. That does not stop me from not posting. I'll go to the parent of the parents. You will suffer this impairment. You are the owner of the goodwill. I'll go and credit the goodwill. I'll go to the goodwill calculation, impairments. That is it. That is it. The next is say consolidate. That's it. We have to consolidate now. I will now say, what is the cost of investment? Go to the financial statement. It's recorded. It's there already. Investment in Super Group. It has been recorded. I will now remove it. I want to calculate goodwill. I need this investment by crediting investment because it has been recorded. I will now take it to goodwill calculation. I'll say cost of investment, 1/8. I can add my net assets. 1,000 plus 900, 1929. Share proportionate. Don't forget the share proportionate method. NCI, the date of acquisition, 0.3 because 70% times 2090. That's it. Share the net assets, share proportionate based on the growth structure. 0.3 times 2090. What is the answer?
$627. 627.
627. Second leg, I'll go to the goodwill calculation. 627. 627. Add NCI. 627, which is 0.3 times 20. I will add it to give me purchase consideration. 7, 2. 8 plus 6. That is 14. 14. 2 for 2, 7. This is the purchase consideration. Net assets are less. What is now the goodwill? 2427 minus 2090.
337.
Yes,
337.
337. I will less the impairment. 337 minus 50.
287.
337 minus 50.
287.
287. That's the end of the goodwill calculation. Goodwill that will go at the date of consolidation. Impairments. Goodwill. Adios. Next, I'll go and pause and start calculating. $1,000. Nothing happened to the retained earning. I close. I'll bring it down. 1520. 1520 minus 900. 1520 minus 900.
620.
620. Goes. Total. 640. That is it. I will share the profit now. NCI. Show profit. 0.2. No, 0.3 times 640. That is the end. 0.3 times 640.
192.
190.
192. 192.
192. 0.3 times 6. 192. This will give me 9.
819.
NCI. Because I know the principle very well. There is no goodwill attributed to NCI. I can design my NCI in other way. Or what is the net asset at DOC? Because $1,000 plus 1,520 plus 210.
2,730.
2,730. Or NCI at DOC 0.3 times 2,730 to see give you 819. Because NCI only entitled to net assets. Goodwill, I'll go and post. They will balance the accounts. 287. would be 27. BPE 4906 plus 2860 plus 190 plus 20. Somebody should give us
7976.
79. Confirm the figure. Inventory. Inventory.
1391.
13. Receivable.
2346.
368. What do you call it?
2346.
We don't add the equities. Is the equities or the parent? Go to the question, what is the share capital of the parents? What is the share capital of the parents?
4462. 4462.
You tell me now, I'll go and calculate it. I've not shared the profits. I'll say share profits. $0.7 times 620. 0.7 times 620.
It's 640, sir.
It's 620.
You use 640 for
Yes.
NCI.
Good question. Because we allow, the standard allow for the parents to have share of his revaluation in his book. Let's go look at it. I'll go to his book. I will share the 20. So, revaluation surplus. It's allowed for the parent to share. That's why I say before NCI leave a space, two things can come there. No question can carry the truth. It's going to collect 0.7 times 20. You will not share it with retaining land revaluation. $0.7 times 20.
14.
14. Let's go back to the retaining so that I can move to the next question. $0.7 times 620.
434.
434. Summit.
2533.
2533. Are you sure? That is the end of the question. I've gotten my NCI 819. I've gotten my retained 2533. 2533. 2533. NCI 819. Then no current liability. Loan. This will give me 456. Trade payable. 1, 2, 4, 9 plus 1, 5, 7 minus 8, 6, 7. 1, 5, 4, 6. 1, 9, 2, 3 plus 6, 1, 5. 2, 5. 8. That's the end. I will now sum them up.
$12,368.
For which both of them,
Yes, sir.
we are checking the solution.
Not at all. Oh. Eh? I can't do that. I'm deceiving myself. I'm doing that.
Okay, good. 12,000.
368.
That's it. $12,368. That's all. Let's go to another question. Well, let's see this. We are still dealing with cash under cost of investment. We are still going to shares, deferred, contingent, or the cost of investment is gathered. Don't worry. Trust me, you get it.
Sir, can you explain more on this share of profits?
The 620 and 6 what?
Yes, sir. Yes, sir.
For the 640, NCI only have one account. NCI only have one account. Everything you share to NCI. But parent is allowed to have his own separate account. You cannot join land with cash. So you will see it. We are going to do another one that has that kind of problem. Parent is allowed to have a separate account land revaluation. It's allowed. So I cannot share it with cash. That is it. Let's take another question. This time around, let's take Watimagbo and Waris fair value. It is fair value. You look at the question. What Imagbo? What did he say? Prepared consolidated statement of financial position of Watimagbo as at 31st October 2000. On as consolidated. Statements of financial position. As at 31st October 2000. Or go and say plants. No current assets. They have plants. 325 plus 70. Pictures. 200 plus 50. Oh, investment in Warisi recorded. Investment in Warisi. $200. I'll write the goodwill. Next, after the goodwill, go to the current assets. I'll leave 2 line space. Current assets. Inventory. $220 plus 70. Receivables. $145 plus $105. Bank. $100 plus 0. Assets. Share capital. I will leave a line space. Hence here. Hence here. Next. Foreign liabilities. Payables. Two seven five plus bank overdraft. Zero plus 20. This is it, my exam. To balance this account now. We need to balance this account. I need good structure. Adjusted. Say any subsidiary. Determination. Net assets. Oui. Recalculation. Write the formula. That is it. I need return. As per SOF. Next one. NCI. That's all. I will now be reading and will post. This is it. I'll be reading and be post. Oh yeah, let's start reading. A minute. Huh? I will read. Very simple. I've opened my working sheets. Additional information A, Watimabo acquired 70% of the issued share capital of Warisi 4 years ago. Good. 4 years ago. Has given me the group structure. Parents, 70%. ACI, 40%. 70%. ACI. Good. 4 years ago, date of acquisition. I'll put it down. Okay. Date of acquisition. 4 years ago. What is that? When the retained earning was 20,000, there was no impairment of the goodwill. Oh, retained earning. We are talking about net asset. Net asset of weekday, date of acquisition. As per SOP, statement of financial position. What was the return of subsidiaries? I will check. 50. Return is 20. Items. DOA, DOC, OS. What is the share capital? 170. 170. Retain earning. The date of acquisition. 20. They said no impairment. For the purpose of acquisition, plant in Aguaris with a book value of 50,000 was revalued to 60. Oh, there is a plant. Evaluation surplus. What is the carry amount of the plant? 50. Fair value. 60. Has it cleared a surplus? Yes. It's a revaluation surplus. Carry amount is less than the fair value. What do I do to the surplus? AP, debit. Reserves. As it. Now, depreciation. Depreciation is charged on 20% for the depreciation. The surplus times 0.2, 1 year depreciation times 4, because they acquired 4 years ago. 0.2 times 10 times 4. 10 times 0.2 times 4.
6.
This is
It's 8.
It's 8.
8.
8. What do I do to the 8? The depreciation now. PPE credits. Adjusted. Absorb. Eight. Debit, don't forget. Or go and plus. PPE. Surplus. I'll go to the net assets. The valuation surplus on plants. Ten. For the second leg of the PPR, I'll go to adjusted return. That is it.
Sorry, sir, I have a question.
Yes, that's a question.
So if it's revaluation deficits, we are going to credit the PPE, right?
Yes, to bring it down.
Okay, sir. Thank you.
Next. But my boss so good to Warisi. But my boss is the seller, which is the parent. Said it's sold at a markup. %. Then there is unsold. $45. Unrealized profits on inventory. 25 over cost of markup, 100 plus 25, times 45. So this will give me 25 over 125 times 45. Any issue? Any issue? What does it give us?
9.
What do I do to the 9? Seller. Seller. Accounts. Debit. Consolidated. Credit. I'll go and post. Who is the seller? Parents sell to subsidiaries. Waris owed Watima bought 35 for goods purchase. And Watima bought owes Waris 15,000. Separate owing. Nothing in transit. Separate owing. Separate owing. The parent is saying the subsidiary, you are owing me 35. Subsidiary is saying, parent, you are owing me 15. You would treat it like the first one. So I will add the two together. I will now treat nothing in transit. They did not say that cash is in transit. First one, separate owing. Any issue? Ask question. So I will now eliminate the 50. No receivable. 50. Trade payable. Minus 50. Minus. That's all. No receivable. Trade payable. That is it. True. Next question. It is the group policy to value not controlling interest at fair value. The market price per shares of not controlling interest shareholders just before the acquisition was 1.5 kobo. He has given market price per shares. Don't forget, he has told me it is fair value. How do I know it is fair value? Set 1. Market price per shares of subsidiary or NCI will be given. 2. Say goodwill attributed to NCI will be given. Say fair value of the whole subsidiary will be given, and the fair value of NCI will be given. I mean, fair value of NCI, market price per shares of NCI will be given. That is it. But for me to get the value of NCI now, he has given market price per share of 150. 1.5 kobo. I cannot put 1.5 kobo. I need to calculate. Total numbers of shares is subsidiary. He has 170 shares at a nominal value of 1 naira. 170. What do I do now? Parents acquire 70 NCI. I'll just say NCI value at the date of acquisition. .3 times 170 times 1.5 kobo. That's it. Please give us the answer.
Yes. 76.5.
What do you call it?
76.5.
I will now pose the 76.5. Parents. NCI at the date of acquisition, 76.5. I'll put. O'Connor is okay. That is it. Next, in my goodwill calculation. Wow. In my goodwill, I've done that. That is the end of the question. We can now consolidate. I'll go out to the question. If you go there, in the statement of financial position, the cost of investment is recorded. We'll remove it. How much? 200. Investment in Warisi. I'll go here. It's okay. So investment in Warisi, I will remove. It has been recorded. I will take it to the net assets. Goodwill. Yeah. 100. I'll take it to the goodwill. Cost of investments. 200. Purchase consideration 276.5. There was no impairment on this. Okay. What is the net asset at the date of acquisition? 200. $76.5. We'll go to the no current asset report my good with 76.5. Goodwill. That is it. I cannot share the post. What was in the retail earning? 50 minus 8, 42. I'll bring 42 down. One 170, 42, there's no value for them. This will give me 22. Share profits between parent and NCI. Share profits. Next, share profits 0 points. What is the group structure? (0.3 times 22). What is the answer? (0.3 times 22). Please, somebody should give us. For the
6
parents. Huh?
6.6.
Parent as per SWP. $1.5. Share profits 0.7 times 22. (0.7 times 22).
15.4.
15.4.
The answer is 15.4.
I will now add it. That's it. Two one five
230
plus. Eh?
230.4.
230.4. Thank you. I'll go to the book. Furniture Swiss. This will give me 250. Is there any 230.4? What is the share capital?
$700.
SCI. $76.5 plus 6.6. 6.6.
83.1.
83.1. Which one? This is 20. Five. 280. Because 55 minus 55. 5 plus 25, 280. Less share capital of the parents.
700.
700. That is the end. This week, bank will give us 100. 220 plus 70, that's 290. What is the PPE? The plants. For the plants, into 5 plus 70 plus 10 minus 8. 397. $145 plus 105 plus minus 50, 200. What is the total assets?
1,313.5.
1,313.5. Next. Let's hope. $700 plus 230.4. $230.4 plus 83.1 plus 280 plus 20, 313.5. 1, 3. That's the end.